Ladies and gentlemen, welcome back to another episode. I hope you are locked in. I don't know, it just fell. Are we still recording? We're still here. Let's go, baby. Get a little bit of natural McDonald's tea, caffeine in our system. And let's discuss this market. What's coming tomorrow morning that you desperately need to know, okay? We do also have some big Tesla stock news specifically to get into here in this video. And I want to share with you a clip from CNBC. Actually, there was a lot of people that were bullish on CNBC today, but I believe it is Wells Fargo that says to buy the weakness in this market. We'll get to that in just a moment. Ladies and gentlemen, do me a quick favor. If you are locked in on your craft, which is this market, hit that like button and subscribe to the channel. If you have not done so already, check out the link down below in the description of this video for the trading community. And guess what? Jose, the bad cat, well, it's actually a girl. So, yeah. What do we do with that? I don't know. Maybe get her declawed. This cat used my legs as a scratching post. It's actually bad. But nonetheless, without any further ado, let's get into tonight's episode. So ladies and gentlemen, first things first, you gotta understand this, okay? You have to understand this. We just came through earnings season. That was great. We had some weak job numbers. Fine. The economy is still growing, as Wall Street would say, 1 to 2%. Like, we're not plummeting into a recession. We just had very strong earnings. Inflation came in a little hot in your PPI and CPI reports, but not because of tariffs, but because of housing-related services. And as Scott Besson has said recently, in the PPI, it was a lot of investment services that caused the rise. He suggested that was actually a positive thing. There has been no other reason why stocks are selling off. Yes, right now is a seasonally weak period for markets. Okay, and we have very big VIX option expirations ahead of us. Everyone back in May was like, oh no, we're going to see a growth scare in August. Oh no, we're going to see a growth scare in September. Like, it was the most highly anticipated growth scare ever. But the funny thing is, we're really not seeing that growth scare. Or at least it's not materializing the way that some people thought. And by the way, growth scares, weakening data cause corrections, and recessions cause bear markets. Okay, that's why this is important, and that's why it's important to keep up with this if you are an investor in Tesla. And we'll get into Tesla in just a moment. So effectively, why have markets been selling off the last couple of days? Like, every day it's just this, unrelenting selling pressure. Jackson Hole. Okay, there was also other risk catalysts like this morning with Walmart. Walmart really could have dropped the ball and could have been a bad thing. Okay, Walmart, in fact, said, we're seeing no change in consumer activity. Walmart CFO said, let me paraphrase this, but let's quote this here, that people are looking for cracks in the consumer, and there just isn't any. They're just essentially behaving as they were the last 2.5 years, okay? So that was a risk catalyst. The FOMC minutes to a lesser extent on Wednesday. So we passed the 2 risk catalysts just fine. IWM today was up green, up 0.20%, in after hours up 0.06%. NASDAQ was down 0.44% today. S&P down 0.33%. You've seen this sell down heading into Jackson Hole. Jackson Hole is the main event. Now, I want to be as clear as possible about this. First and foremost, there's likely going to be a pre-released statement coming out at about 9 a.m. tomorrow, maybe 9:30 a.m. in the morning, like right as the markets are about to open. Okay. Jerome Powell will actually give a speech at 10 a.m. But what's probably going to move the markets is that pre-written statement. Although if Powell answers any questions or says, deviates from that statement, that could also move markets. But you know what his statement is going to say? Let me give you a sneak peek here. It's going to say nothing. It's going to say the Fed remains data dependent and we are modestly restrictive and the economy is holding, paraphrasing here, the economy is holding up with some weakness in jobs, with some strength in services or something, right? It's going to read just like every other Fed meeting we've heard from Powell. Powell's not going to come out and say, the labor market is weakening more than we would like. We're going to start the process of cutting rates as soon as September. We're not as worried about inflation. Like, he's not going to give that kind of message. He's also not going to give the message that inflation is some kind of big problem and that the economy is doing great. You can't make that argument with the jobs report that we just got. So what are we going to get? Long story short, we are going to get the same Powell as we had a couple of weeks ago. That's it. Okay? With maybe a Powell that leans more into rate cuts. Okay? So Wall Street has gotten all nervous over Powell. The worst case scenario is we get a neutral Powell. That's worst case scenario in my view. There is absolutely 0% chance, in my opinion, Powell is hawkish. Like, we may need to raise rates, or, the economy is just doing so well and inflation is so high that we may not cut rates for a long time. Like, that's not what we're going to hear from Powell. There's a 0% chance of that. If any, most likely we get a neutral Powell that says we're data dependent, blah, 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 the same old, same old. There's a chance that we get a Powell that says, hey, the economy is doing okay. Inflation has recently risen, but the risk is more to the downside in the labor market, so we should begin the process of cutting rates. There's a chance that Powell comes off more dovish in terms of leaning into rate cuts, which is obviously positive. So there's a 0% chance of this big bad wolf Powell, in my view. There's probably like a 90% chance that we get a neutral Powell that doesn't give us any new information. It's essentially a nothing burger. And there's probably a 10% chance that Powell leans into cutting rates in September. Okay, fine. If markets had rallied into Powell with the expectation of rate cuts are coming, sure, I could see a sell-off tomorrow. But we haven't done that, okay? We've been selling off into Powell. Wall Street has been hedging and de-risking. So tomorrow morning, mark my words, I'm not a financial advisor, I'm not a financial planner, and I do not have any short-term options based on tomorrow. I have my positioning. I don't have any hedges for tomorrow. Like, if we get a washout bad day, yeah, like I'm gonna take the hit tomorrow, okay? Good thing I hold long-term stocks. And if you guys want to come invest with us, link down below in the description of this video for the trading community. That portfolio is up like 62% or so this year. We're beating 98% of hedge funds and institutions. And long story short, we're going out finding small cap AI stocks before Wall Street does. I did this with Nebius, Applied Digital, Novartis Semiconductor, even HIMS. I bought that at like 17. I bought the damn Palantir IPO at $10. Okay. IONQ. Like, I like to be first to things. As close to first as I can possibly get. Okay. Anyways, if you want to join, link down below in the description of this video. But the markets have de-risked, right? They're under this impression that we're going to get bad news from Powell. And again, I just don't see that as a possibility at all. Like, of course, is there a possibility? Sure. Is it 5%, 2%, 3%? I don't know. But there is no logic in Powell, giving us really bad news. It just doesn't fit the data that we're seeing. Like, with the labor market weakening. That would support cuts. Yes, inflation is going up a little bit, but does that mean hikes? No, absolutely not. Does that mean no cuts at all for the foreseeable future? Yeah, probably not. That would be a mistake either. Okay, so we've de-risked into this event, whereas in all honesty, if the Fed is cutting rates because the economy is weakening, like that's not a great thing in and of itself. Rate cuts are not uniformly positive. So I do think markets are offsides here at this point. With as many people that are bearish, as many people that have puts on their portfolio, this is not like the moment to panic in my view. Now, what's interesting though, if you look at the QQQ, we're following this longer term trend line. It has turned into support, okay? Or at least it did back here in early 2025. And once you broke that, it really got nasty. We're getting kind of close to that again, if you will. And definitely something to be watching for. The 50-day moving average as well, back here at about 556. If you were to break below that, that could get rough. But again, it's hard to make the case that Powell's going to be like some kind of surprise to markets, because if you guys don't understand this already, markets only move based on things that are not expected. Okay? Like negatively. Okay? So if everyone's expecting, let's say, Powell to be neutral, and he comes out and he's neutral, then it really depends on what happened the last couple of days. Because neutral is neutral. It's neither good or bad. Okay? If that's what was truly priced in. If stocks had ran up into that, then you'd probably fall. If stocks fall into that event, you're going to rise. Okay? So I think Wall Street is just way too nervous heading into Jackson Hole, which historically Jackson Hole is not a big catalyst for markets. Historically, Jackson Hole and the speech from Powell is a nothing burger every time, besides 2022. And that's where some of the nervousness comes up. And, stocks are up a lot in the past, quarter, 2 quarters so far in 2025 from the April lows. So there has been some profit taking, some hedging, and I can understand why some people would want to do that, especially in the hedge fund institutional world. The last thing you would want is some kind of 2022 Jackson Hole again, and then boom, you just lost all your profits for your clients, right? That's not advantageous. But this is not like the start of a larger market crash, in my view. Could I be wrong? Sure. But in my view, it's not going to be from Jackson Hole. It could be if the economy weakens further, but we just had Walmart earnings, and they said consumers are consuming. They're doing what they have been doing. So basically, I think tomorrow is going to be a positive surprise for markets. Because if everyone's kind of bearish on Powell heading into tomorrow, it's not going to take a lot of dovishness to get a large rally to the upside. Okay? I think people are neutral bearish on Powell. Like, nobody's bullish on Powell. Some people are neutral and some people are bearish. So if we get a neutral, slight bullish Powell that leans into rate cuts, that's going to be good news. And I think neutral is a base case with a slight chance of a bullish Powell, but a 0% chance essentially of a bearish Powell, of a Powell that talks about hiking rates or not cutting rates at all. Like, I see no chance of that. No chance of that. So, yeah, leaning into this market at this point is probably a good idea. Now, again, not a financial advisor. We are going through a seasonal weakness period between now and the end of September into really like the first week of October. So for the next like 5 weeks or so, it's a seasonally weak period. Seasonals, okay? What can I tell you? I think that's also contributed to some of the nervousness heading into tomorrow's speech from Powell. But it's going to be hilarious once we actually get the speech from Powell and stocks rally. Like, people were just worried for no reason, essentially. Like, do we really think something changed since the last Fed meeting? No, nothing changed for Powell. I do want to share this news with you that I think is quite impactful. It says Tesla is now hiring robotaxi drivers in Chicago. And I think the deal is with Tesla, the progress is going to happen so rapidly, right? Tesla is hiring robotaxi operators and mapping areas of US cities at an incredible pace. You're going to start breaking into new cities at an exponential rate into the end of this year and 2026. Wall Street is not ready for this at all. They're not positioned for this. They're not pricing this in. So when I think about what's priced into Tesla, it's not that. It's going to be a massive upside surprise for Wall Street. And I think even retail investors at this point, because I think retail has grown far too bearish on Tesla also. And that is going to be, proven to be a mistake. Now, Elon Musk also says that Tesla's FSD V14 is releasing next month. So that's going to be big. JP Morgan tells clients that Tesla is, quote, the future of transport. You can see this here. And final option activity today for Tesla looked pretty damn good. You had 94 different trades totaling about $500 million with a positive order value of 61%. And short sellers covered about 331,000 shares on net today, which is a great sign heading into tomorrow, in which I think markets are going to have a bit of a recovery. Now, the reason we cover the broader market so extensively here on this channel, as well as Tesla, is because, again, I've said this many times on this channel, but you could invest in a company, Tesla for that matter. Tesla could be doing all of the right things, giving you good news day after day after day, which is really what has happened for Tesla this week. It's just like every day we've gotten good news. But Tesla is not going to go up on good news when the markets are in this overall risk-off narrative, unless it's something huge that, the broader markets can't really overpower, something, I don't know, like huge, okay? It's just not going to have an impact to Tesla. And that's the deal, right? When the markets flip and are no longer super bearish, that's when some of the good news could come back and start being reflected in Tesla stock. And that's one reason why I think Tesla could have a really big day tomorrow. And honestly, I think the Russell could be up 2% tomorrow. I think NASDAQ, S&P up well over 1%. Definitely in the cards. I don't really think it takes a genius to interpret just how bearish the markets have been in the last couple days heading into Powell. People are nervous. Wall Street is hedging. People are expecting the unexpected. But when we don't get any new information, the markets are going to revert back to where they were a week ago, right? Did anything really change from the CPI report when the triple Qs went up 5% in 2 days? No, nothing changed. Same old, same old. In fact, I would say things are even better now because we got Walmart earnings out the way. We know the consumer's not falling out of bed. I would say we should be higher now than where we were a week ago, logically speaking, okay? We also have NVIDIA earnings still coming up, but it's just the fear of what Powell could say that is spooking investors. Same is true for Tesla. Tesla should be in the 340s, 350s, 360s, 370s, 380s right now. Right now, it should be $60 higher. Judging off of the good news we've gotten in the last couple of days, and what minus Powell, the markets should have done. Okay, Tesla should be higher right now. And I think a neutral Powell tomorrow, a neutral to maybe slight dovish Powell, slight. I'm not expecting anything too crazy out of Powell. Neutral to slightly bullish could be a big catalyst to send stocks higher. Now, I do want you guys to listen to this clip. It says investors should be buying on this weakness, says Bank of America's Chris Heisey.
Out of seasonal choppiness in stocks, a helpful reset to refresh the bull market, or signs of a more fragile tape emerging? Let's ask Chris Heisey, CIO of Merrill and Bank of America Private Bank. Chris, good to see you.
You too, Mike.
We've been through versions of this before, right? With the high momentum stocks, they hyper concentrated index. A lot of these imbalances are presented, happened at the start of this month. Market tries to just kind of take money out of one pocket, put it into the other, and cool off where it needs to cool off. How are you reading this episode?
So you try to parse it and you try to find out, is this like a true rebalancing that's happening with longer dated money? Is it some of the systematic strategies trying to unwind a little bit of their overexposure? And there's not a lot of evidence to suggest either or. So it seems like it's across the board. It's a little bit of an exhale. It is obviously the last tail end, a couple weeks of summer in August. You mentioned seasonality. This is when we should be buying on weakness. When you don't have any fundamental news, it's just simply the market got tired. And there isn't a lot of on the buy side to kind of pick up for some of the areas. And it latches on to any negative headline and sometimes creates them. Mm-hmm. So we would use this weakness as a buying opportunity. And, it all stems from what are profits going to do? And we still think profits for the remainder of the year and into next year. That's your linchpin, that's your catalyst.
Well, yeah, and consensus earnings forecasts have been inching up for this year and next. That's certainly a support. But to your point about how maybe the stories start to crop up when the price action gets a little bit less favorable, this has coincided with a bit of a rethink of the AI theme in terms of where we are, whether we've overplayed that hand, whether given companies have been granted a lot more credit in advance than they deserve. I mean, Meta, down for days. You keep having these negative headlines. I keep waiting for that stock to maybe ignore some negative headlines and bounce a little bit. Now, it's obviously not down huge compared to how much it was up. But how are you now thinking about the AI kind of mega cap tech trade if you're looking for places where you would want to buy this dip?
Yeah, there's still a lot of people, believe it or not, that are waiting to see some of these names come back to earth a little bit. But we all know this. The CapEx story for generative artificial intelligence is still going up. In other words, the hyperscalers are still increasing their growth rates of what they're adding into it. So until that crests, Mike, these names are still going to be additive and much higher growth than the rest of the S&P. So if you are in the short-term world of looking at momentum in terms of earnings growth, and some look at three types of momentum, price, news, and earnings, these are the names that still have that. So yes, they're going to get ahead of themselves, for sure. We've seen it time and time again. Until the earnings story, until the CapEx story crests, those are areas of the market that will still be the leader.
Are we seeing anything in the way the market's behaved in this last little stretch to suggest there's a little bit of a hesitation about just how strong the underlying economy is? I mean, cyclical stocks have actually done pretty well going into this period, although you start to see some reawakening in some of the defensive groups recently.
Yeah, absolutely. You're seeing in obviously some of the beaten down pharmaceutical areas is one, some of the consumer staples. But what's interesting is you mentioned small caps before. Small caps, one of the better performers in the last month, and particularly in August. Now, we've seen that happen before, too, only to kind of fizzle out. But something seems to be changing a little bit there. It seems like some of the industrial side of the small caps is picking up because of, we're not going to say a manufacturing renaissance, but certainly there's better news coming in the manufacturing world, and the small caps are, a big haven for that. So I think this rotation, this rebalancing, still can continue, even if tech remains that cornership leader that's within the market. I think you can have both sides.
So again, I'm convinced that we're going to see a recovery tomorrow in markets, that people got way too nervous for literally nothing to happen on Friday. Fact of the matter is, we're getting out of earnings season at this point. Yes, we still have Nvidia to report earnings, but earnings have smashed expectations. The economy's holding up. Nothing changed since the inflation reports. Like, rate cut or not, does it really matter? No. And yes, we're still pricing in a rate cut. Okay, let's be clear. September is still priced for a cut at about 70-ish%. So I just don't see what the new information is going to be that causes people to get even more fearful. You have to really compound fear on top of fear, okay? So markets are already fearful right now. What's Powell going to say to get us even more fearful that aligns with the data? I just don't see it because the jobs reports were so bad. Powell has to leave the door open to cutting rates in September. If Powell were to shut that door, then maybe he actually does get fired. Like maybe there's something else going on at that point, right? Like they were so weak, you have to leave the door open for cuts. Can't shut that door. If Powell doesn't shut that door, I just don't see where the negative's going to come from. And odds are we get nothing out of Powell, literally nothing. And then the markets breathe a sigh of relief as the event risk is over. People can start to get positioned back in markets again, just simply because of that. I don't know. Maybe I'm just a delusional bull. Let me know your thoughts down below in the comment section. Ladies and gentlemen, hit that like button and subscribe to the channel. And again, I think for Tesla and some of your more risk-on stocks, that means, again, an outperformance. Like Russell today, outperformed. I think it's going to outperform tomorrow. I think AI stocks are going to outperform tomorrow. Tesla, higher beta, it's going to outperform. So again, let me know your thoughts down below in the comment section. If you guys would like to come join the trading community, check out that link down below in the description of this video if you have not done so already. Have a great rest of your day, and I will see you in the next one.